All right, guys, let's get fired up. Let's go. So before I actually go on the chart, I want us to look at this picture right here. If you see me going through this WhatsApp chats, that is my mentor, Nana Shraba. He's my mentor. He's taught me a lot of things, and everything I know, literally everything I know about trading, he's been providing me with it. So I hope everybody can see my screen. I forgot to ask. Can I get some 4s in the chat box if everybody can see my screen? All right, fabulous. Good. Okay. So these are some of the things that Team Traders is doing. The last session that I did on basics of smart money, I taught people about gaps, imbalances in the market, institutional markets, and what liquidity is about. Today, I am going to do basically literally the same stuff, but then more detailed for people to grasp the concept of what Team Traders is really doing. So if you look at where my cursor is right now, you can see there is something like an M, right? And on top of the M, we drew a line, a horizontal line. There we have a green candlestick. On some of your chart, let me just say, you have a bullish candlestick, an engulfing red candlestick, an engulfing red candlestick, bearish candlestick. This is where you want to be selling the market. This is where you want to be selling the market. Hence why we have pointed out in that zone, point of interest, POI, that's just what it means, point of interest. You want to take the opening of that institutional candlestick, this green candlestick being your institutional candlestick. The reason why it is an institutional candlestick is because it has taken liquidity, right? And when it took liquidity, that was when the institutions came in. They bought to take away the people's stop loss. Hence why I have the dollar sign up there. So every single retail trader who was buying the M pattern, knowing that, okay, an M means a reversal, the institutions take the advantage to buy, take out your money out of the market, and then they push the price in the direction where the retail traders wanted to go in the first place. Is that making sense? Is that making sense? Okay, so what time do you have on the charts? Sorry, 15 minutes? Now I can use every time frame. As time goes on, I'm going to be doing top-down analysis, so people are going to grasp exactly what I'm doing. Sometimes we're going to enter trades of 1 minute time frame, sometimes 3 minutes, sometimes 5 minutes. Everything works. There is something that I've learned from trading, that price is fractal. What you see on the daily time frame is the exact same thing happening on the smaller time frame. But then you're catching minimum pips if you're using smaller time frame compared to taking trades from the higher time frame. It works on all time frames. Very good. Thank you, T. The movements are the same. Glad. So yeah, people are following. Literally, I'm going to repeat the same thing if people didn't really catch what I meant by institutional candlestick and where we want to be selling. So where you see a double top, you are waiting for the institutions to come into the trade. See what the institutions are doing. They are going to leave their blueprint, which is this candlestick, telling you that they have taken away the stop losses of all retail traders, which is some of us that do not know what these institutions are doing. They leave their blueprint, which is that green candlestick, the engulfing candlestick, telling you that this is where they are pumping more money into the sell side of the trade. Immediately this happens, if you are on a 4 hour or 1 hour time frame seeing this, I don't want you to rush in catching the trade or trying to do a sell execution right here. Literally, all you need to do is convert your time frame. If you're on a 1 hour, go to the 15 minutes or go to the 5 minutes and wait for the pullback on the 5 minutes to this zone, sell zone you would be creating on your 1 hour. Immediately price come back in there. There you are doing your market execution straight away. And this is what Tim Traders is doing every time he's on the session. He sees what the institutions are doing, taking out the lows and the highs in the market, leaving their blueprint. Immediately, they reverses on the smaller time frames into that zone that he has already marked, which is the point of interest. He is going to ask you to do a market execution. That is the sell side. On the buy side is the same thing. Literally, retail traders are looking at W patterns, right? So they are looking to buy the second part of the W. And that is exactly where smart money is coming in. The institutions are coming in. They know that we are reluctant. We are very happy to take the W's. We are very happy to take the M's. So they are going to wait for you to enter your trade, put your stop loss right above or below your M or your W. In this case, we're looking at W. So you're going to put your stop loss below the W. And look what they did. They pushed in a sell straight away, hit all your stop losses. And what did they do next? Pumped up money for the buy position. On the 1 hour time frame, just like I said, for the sell, on the 1 hour time frame, if you see this, switch to the 5 minute. From your point of interest that you have created, I'm going to show you how we create the point of interest, the buy zones and the sell zones once we go to the real charts. On the 5 minute, you're going to see a pullback. A pullback into the sell or the buy zone. That is where you're going to be looking to sell or buy. I hope that makes sense. Give me a 1 in the chat box if that makes sense. How many people on the call? 41. I'm only seeing few people. If you're not getting it, feel free, just say it. I am happy to go very slow for people to understand it. I'm doing it because of us. I'm doing it because of you on the call. So there is no point in me just rushing through because few people understand and other people don't understand. I want us to have the skill very nicely. No, I am not getting it. Okay, all right, all right. I am going to go over it again. So we are being taught usually as retail traders, if you see a W, if you see an M, if you see a double top, a double bottom, what are you doing? You're going to look for the second part of the double top and you're going to sell. Does that make sense? They are hitting our stop losses and then pushing the market in the direction we already expected perfectly. That is exactly what they are doing. So we know, you see, if you go on Google and you type, you want to set for trading strategies, the first thing that you're going to see is W's and M's. And do you know why? Logically, they are doing this for us to understand that these patterns really work. Believe me, you're going to go in the market 10 times out of 20, maybe you're going to get the win. But then most of the time, you're going to see that these institutions are just going to jump in, smash your stop loss, and then bring the trade straight into your direction. And this is exactly what I'm talking about. What do you mean by an M or W? All right, so Galaxy Tab X2. Sorry, I haven't got the name, so that's what I'm going to call you. Can you see this pattern right here? Does it look like an M to you? That pattern right here. I want you to answer me before I move ahead because you're the one I've got my attention on right now. Let's get this. Can someone tell friends to let me? Oh, sorry. Let me let you in. All right, yeah. Thank you, everybody. So literally, I want you to see this as an M or W. An M or W is the shape that we're looking for, literally, guys. Somebody's not muted. Somebody's not muted. Mute. Thank you. Thank you. All right, good, good, good. So these are the shapes that we're seeing in the market. Something like an M. Guys, yes, but how do the M and W come about? Okay, can you wait? If we go on a live chat, I'm going to show you how these M's and W's are being formed. Please, let's get over with this quick understandings. M or W are the candlestick patterns, equal highs and equal lows. Thank you, T. But I'm going to show you once again, once we get onto the charts. For now, let's focus on these pictures right here. The shape M and W, that's where we're looking to enter trades, right? That is exactly where smart money is looking to sweep our stop losses. Oh, come on, what have I done? That is exactly where smart money is looking to sweep our stop losses. Sorry, guys, hang on a minute. That is where smart money is looking to sweep our stop losses. In the sell instance, you see the smart money will go above the M, right? And this is the M shape right here. Smart money will go above the M. The institutions will go above the M, creating an institutional blueprint, which we call institutional candlesticks, right? In this case, this is your institutional candlestick. For you to understand that they have created an institutional candlestick, you're going to see an engulfing bearish candlestick on the sell side. Hence why this, you can see a small blue candlestick and red, a very big red candlestick, a very big bearish candlestick in this case. Just like I said, on a 1 hour time frame, if you see this, just jump onto the 5 minutes, 15 minutes time frame and look for a reversal into your sell zone. What do I mean by the sell zone? The opening of that institutional candlestick and the 50% of it, that is where they have packed out their orders. So after they have packed out their orders all in this position, they have to come back to close out their position at break even. This is the logic behind what they do. They have to come back and close their orders at break even before they push the price in the sell direction. At this point, they have already taken your money out of the trade. Maybe you place a 0.5 lot size. Guess what? They're going to sweep your stop loss. If it is 10 pips, 20 pips, they're just going to sweep it, scoop your £5, 50 pounds, and straight away, they go in the direction where you want to go already. You just be looking at the chart and thinking, I was in the right trade. How come they hit my stop loss? The reason why they hit your stop loss is because you fail to understand that M's and W's are not your friend. M's and W's are rather target for institutional traders. Give me a 2 in the chat box if that makes sense. M's and W's are not your friend. Instead, they are a target for institutions. Fabulous. I want you to take very good note of that statement I've just said. M's and W's are not your friend. They are a target. Make sure you are always saying that in your head every single time you see this on the chart, guys. Every single time you see this on the chart. M's and W's are not your friends. They are a target for institutions. Wait for them to target that area, clear that area, open, and then you will enter the trade. I'm glad people are giving me the 2s. I'm very, very glad. From now on, I hope we're not gonna put ourselves so plain for the institutions to get us. If you look around this area, we have a red candlestick, a bearish candlestick, and a little green candlestick, a little bullish candlestick in the middle, and then the sell continues. See, usually what the institutions does is, people are jumping into the trade. They saw the position, okay, they saw that the trend is going in a sell direction. So everybody is jumping on the train. What they will be doing is, they will literally push in some money to create a buy. And guess what? They usually do this where people are looking at supports and resistance. Take very good notice of this. They usually create this blue candlesticks or red candlestick in the middle of the trend where people are thinking there is a support or a resistance. So guess what? They create that, especially they're going to create a shape like a doji candlestick. They're going to create like a pin bar candlestick, making you feel like, okay, you know what? The trend is about to reverse at the resistance zone. So let me just pop in my buy. And guess what? Immediately you placed your buy, straight away, they push the price all the way down, taking you out of the trade and continuing the trend. 3 in the chat box if that makes sense. Have you seen this in the market before? Give me a 3 in the chat box if you've ever felt this before in the market. Happened to me. It happened to me as well, you know. I've been a victim to that. 3, it happens, especially on DAX. Very good. On DAX, I am still doing DAX. I'm still practicing DAX, you know. I need some skills from you, April. Because usually what happens is, you think the support is going to hold. They create this doji candlestick. They create this pin back candlestick, giving you the signal, yes, we're reversing. Immediately, they continue the trend and you're like, what have they done to me? You know what? You forgot to understand that they're just doing that to trick you. So for me, if this candlestick form, I am going to wait for the next 2 candlesticks to form. Then I will wait for the pullback into that same candlestick they created. That is what I want to sell. If they create this candlestick at a support or a resistance, I want you to wait for a 2 or 3 candlestick to form. Wait for the pullback into that same candlestick and join the trend. Are we getting some value right here? Are we getting some value right here? Who is catching some value right here? Okay, I am going to repeat it. They are going to set up this candlestick, a bullish candlestick in a downtrend, right? Usually at a support resistance to trick us thinking that they are reversing it. Usually these candlesticks are doji candlesticks or pin bar candlesticks. Candlesticks with long wicks telling you that they are about to reverse. Instead, immediately you placed your trade, they formed candlesticks in the same direction they are already going. And this is where I want you to be waiting for 2 candlestick or 3 candlestick to be formed. Wait for the pullback into that same candlestick they created, which is the blue candlestick in the downtrend or a red candlestick in an uptrend. Wait for them to pull back into that same candlestick and then sell or buy. That is all I meant. Is that the same method for buy? Absolutely. Look down here. You can see my picture right here, down here. That is exactly what they are doing. A green candlestick in a sell trend, a red candlestick in a buy trend, usually at a support and resistance areas. Don't be a victim to this, please. Don't be a victim. Always don't rush to take the trade. What the institution does is, when they reverse, they will give you a signal exactly what they are doing. And if we go on the live chat, I'm going to show you exactly what they are doing. I have a strategy that can give you a minimum 50 pips a day from the chart. Just take one pair, look at it from exactly the things I'm telling you today, and I can guarantee you a 50 pips a day, just like that. So you wait for it to pull back, and then you enter on the first candlestick after the pullback. Exactly. Sometimes what I do is, if I see they have created 2 candlesticks after what they have done, I am going to sell. I'm going to set a buy stop or a buy limit or a sell limit. You were speaking. Thank you. I'm going to set a buy limit or a sell limit right in this candlestick where they created to deceive me, right? So if you did a buy here and then they took you out, guys, it's not all lost. Everything is not gone. All I want you to do is just wait for them to pull back into that same candlestick and join the trend. I hope that's making sense. Give me a 2 in the chat box if that's making sense. 2 in the chat box, guys. 42 people. I want to see 42 twos. Nice stuff. Nice stuff. I'm so happy when people are grasping the concept. This is what I want us to do, guys. This is what I want us to be doing. Oh, somebody's waiting. Sorry, David. So yeah, now let's go on the third part, what they really do, what smart money really do. Now I'm gonna bring my stuff here. The last time we had a smart money session, I told you about what a gap or an imbalance is in the market. If you look at this side of my picture right here, there is a red candlestick right here and another red candlestick right here, separated by a strong bearish price action. So what is an imbalance? Imbalance is really two small bearish or bullish moves separated by a strong bearish price action or bullish price action. If you're taking notes, I want to take it again. An imbalance refers to two bearish or bullish candlesticks separated by a strong bullish price action or bearish price action. Okay, the English is not making sense. Let's look at the picture right here. There is a candlestick right here, and there is a candlestick right here. And look at this strong bearish price action. The wick of this candlestick is not touching the wick of this candlestick. Guys, give me a 1 in the chat box if you can see exactly what I'm talking about. Give me a 1 in the chat box. Happy days, happy days. People are catching the concept. We are catching the concept right here. Glad. The wick needs to overlap. Thank you, April. The wick of this candlestick and that wick right here needs to overlap. If this overlap is not happening in the market, it is called an imbalance. It's like if you're a bank manager or whatever it is, accountant, and you're trying to close your worksheet or your account sheet by Friday, and then you realize that somebody was supposed to pay a loan on Friday afternoon at 12 p.m., but then they didn't pay it. You're not going to be able to close the account unless that money has been paid. And that is exactly what smart money is doing in the market. They create this intentionally, telling you that this is our blueprint. We're going to come back here to close our orders before the day finishes or before the week finishes, sometimes before the month finishes, depending on what time frame you're looking at. So if you can look down here, imbalance or gap equals unhealthy price action. For big banks, for institutions, this is probably about £1 million. This is probably about £2 million packed around this imbalance that needs to be closed before they can actually continue the trend or before they can change the trend to wherever they're going. I hope that makes sense. What time frame would you be looking at? I'll be looking at every single time frame where possible that I can get a clean price action to enter the trade. If that makes sense, I'll be looking at every single time frame where I'm going to get the cleanest entry to enter the market. Okay, so if you have an imbalance and the imbalance is too big, this is what you do. You take the 50% of the imbalance. Last week, I was watching Tim Traders. Who took the gold trade? Anybody here that took the gold trade from Tim Traders? Fabulous. This is exactly what Tim Traders did. He looked at the gap that was created on the 5 minutes time frame. He knew the trend was bearish, right? He was looking at the red candlesticks. He knew the trend was bearish, and exactly what he did was took the 50%, waited for price to come into the imbalance, and he asked everybody to do a market execution straight away, if you remember. So it's not by mistake. It's not by like default or magic what Tim Traders was doing. He just identified the imbalance that was created in the trend, waited for the pullback into the imbalance, 50% of the imbalance, and he asked market execution, and that was just 80 pips straight. So he knows he is going to make money on that 50%. Exactly. He just know it. He know that immediately price come back into the 50% of the imbalance, they're just going to reverse. So it's just a little pullback into the imbalance, and straight away a reversal is happening. I hope this is making sense. Give me a 2 in the chat box if this is making sense. Happy days, happy days, happy days, happy days, happy days. I need more twos. I need more twos, guys. So essentially, this can be used as a scalping strategy. Yes, it can be used as a scalping strategy if you know what the direction, the direction big banks are moving price towards. Yes, you can use it as a scalping strategy. You can catch at least 10 pips from every single gap you're entering. Glad. Okay. I want to show you one more thing that is very, very, very important before I want to show you one more picture before we go on the chart. I'm glad that every single thing is making sense right here. I hope everybody can see the picture on my screen right now. Give me a 1 in the chat box if you can see the picture. Thank you. Now we're going to go on the chart, hence why I am showing you this. Every single time you open your chart, guys, every single time you open your chart, this is what I want you to see and ask yourself, where is the money in the market? Can somebody tell me in the chat box where they think the money is hiding in the market? From what I've just gone over with the W's and an M in the chat box. I just want to know if people are really following exactly what we're doing. Hence why I pulled out this picture. Where your line is, where your line is. Where my line is? Oh yeah, something like that. On that blue candle, the second one at the bottom. Tops at the bottom. Okay, yes, at the bottom. I can see some money right there, tops of the M. Thank you. I like that answer from T right there. Tops of the M and the W's. That is exactly what I was looking for. Tops are the M's and W's, equal highs and equal lows. Every single time you open your chart, guys, this is what I want you to ask yourself. Where is the money sitting? Are you seeing an M or are you seeing a W? Right? Are you seeing an M or are you seeing a W? If you see an M or a W, that is exactly where the money is sitting. Fabulous, fabulous. Thank you, Philip. The pounds are sitting on top of the M's and the W's, guys. And that's the picture I want you to create in your head. I want you to write this lineup, these questions right here in your notes, because I want you to be able to ask yourself this question before you even start marking up the chart. Where is the money? And the next one is, where is smart money in drawdown? What do I mean by drawdown? Where is smart money in a minus? Where is smart money in a minus? Just like we always see some reds on our chart, believe me, smart money intentionally creates a position in the market where they are going to be in a drawdown, where they are going to have minuses. Look, in this case, they are in a bullish trend right here, right? A bullish trend right here, and they created a sell candlestick right down there, gave themselves a drawdown, creating a strong bullish candlestick. Assuming they pumped about £1 million around this area, already they are flying in minus 3 million right here. Sorry, my ice cream van is passing by. Yeah. So in this case, smart money is over 3 million in drawdown right here. I want an ice cream. All right, hey, but if you can come over, I can get you an ice cream. The sun is too good for an ice cream, right? It is too good. It is too good. Happy days. Okay, let's get back on the chart. Let's get back on the chart, guys. They created a sell candlestick, which is the red candlestick we're seeing right here, right? And a strong bullish candlestick. So in this case, this is the area smart money is in drawdown. Number two, where is smart money in drawdown in the market? Smart money in the minus. I don't get it. Smart money in the market. Okay. Smart money in the market is a situation whereby smart money is intentionally selling even though the trend is an uptrend, just to deceive us. And later on, they will come back and close their orders. Does that make sense, D and K? Smart money is in minus. I don't get it. Does that make sense, D and K? Give me a go ahead and I can pull on. Okay. All right. Okay. Let me explain it this way. So you're in a sell. You're in a sell position, D and K. But then you have an uptrend, meaning price is in a buy, but then you decided to sell. And then after some time, you realize that price is continuing to buy up. And your money, you're losing money because you're in a minus. So we should only look to take our trades on the DXN on the direction of the trend. Exactly. We're taking our trade on the direction of the trend, right? But then smart money intentionally, they sometimes intentionally create these positions in the market where they give themselves a drawdown. And the reason why they give themselves the drawdown is because they are taking you out of the trade. They are taking you, the buyer, out of the trade. Maybe you saw the trend is going up right here and then you did a buy market execution. Immediately, they are going to come back into a sell position, take you out of the trade, and continue in the same direction. So smart money have to move the market by either buying to sell or selling to buy. Perfect. An institutional candle is where they are in drawdown. Thank you very much, T. Thank you very much. I hope that makes sense, D and K. Let's repeat that. Thank you. Glad that makes sense. So we are finished with the part 2 of this context. Where is smart money in drawdown? We're done with it. What is their agenda? What is the reason behind smart money for the exact day that you're looking at chart? Right? I.e., what time frame, bias, or market structure, or market trend, or market position is smart money looking at? What is their agenda? That is the third question I want you to ask yourself every time you open your chart. To take traders out of the market. Exactly. They are taking you out of the market, and that is their agenda. And for them to take you out of the market, they are going to go in a direction, opposite direction of the trend, in order to go in the actual direction. I hope that makes sense. Guys, give me a 1 in the chat box if that makes sense. The agenda of smart money. Give me a 1 in the market if that makes sense. Oh, yes. I'm seeing it once. I'm happy. Guys, I want more ones. 40 people in the chat. I want more ones. The rest of the people, is it not making sense? Feel free to say it. I will go over it. Nice, 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 nice. No, not to me. Okay, Lauren, I'm going to go over it. I'm going to go over it. I'm going to go over it. Not making sense. Okay, I'm going to go over it again. What is the agenda of smart money? What I'm trying to say by what is the agenda is what is the trend of the day? Are we bullish? Are we bearish? If we are bullish, the agenda of smart money is to trade bearish in order to go bullish. Can you show me an M or W in the chat? Yes, I am going to show you. Immediately we jump on the chat. So Lorraine, smart money is always going to go in the opposite of the main direction of the trend before they go in the actual direction of the trend. And that is always the actual trade you want to take. Wait for them to go in the opposite direction of the main trend, then you can start looking for an entry into the actual trend. Is that making sense now? I want to see some response, guys. Let's get some response, then we can move on. Yes, 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 yay, yay. I made it. Okay, they create a pullback on purpose to take out some people before continuing the main trend. Happy days, Anne-Marie. That is just perfect. That is just perfect. I think I'm going to steal this quote right here. So they are going to create a pullback intentionally create a pullback, take people out of their positions before they continue the trend. Good. So the last question is, what is price doing now? If you open your chart, how many blue candlesticks are you seeing, guys? How many red candlesticks are you seeing? Are you seeing more blue candlesticks than red candlestick? That is what you want to be asking yourself. I believe this is so simple for everybody to understand, right? A one in the chat box if it does. Give me a one in the chat box if it does. What is price doing currently? I believe everybody's saying, everybody can just say, okay, I'm seeing more reds. It is bearish. I'm seeing more blues. It is bullish. Fabulous. Fabulous. Now, without much ado, let's go on the chart and see some real circumstances where smart money is playing their games. All right, so we're back on the chart right now. Let's go on Euro GBP. Sorry guys, I've got some few markups right here. Let's go on a different chart. Okay, so yeah, this is a clean chart I have right here. I want the perfect examples of exactly what I'm talking about, what smart money is doing, okay? What smart money is doing. Aha. Let's focus our attention, guys, around this area. Let's just focus our attention in this yellow box right there. What do you see? Might want to grab your charger quickly. Oh yes, I need my charger, thank you. What do you see? What do you see in that yellow box, guys? I want everybody to give me their point of perspective. What do you see in? M and a consolidation, yes. M, yes. We're seeing some M's right there. Seeing some M's, guys. The exact stuff that we're talking about, M's. Sorry, guys. Just grabbing my charger. All right, so more reds. Thank you. We're seeing more reds. We see more reds. And there is a reason why we're seeing more reds right here. There is a reason why we're seeing more reds right here. Smart money created some strategy right here that we've been talking about since I started this Zoom. Look at this, guys. Look at this, guys. Can I say that I'm seeing some kind of an M position right here? Can I say that, guys? Give me a 2 in the chat box if you can say that. If I can say that, that is an M. Somebody was asking in the market, during the picture time, what is an M in the market? Now we have an M in the market. So literally, this shape in the market is happening every single time. Look at what they did. They created an M, and I believe people were happily selling right here. Yes, we have gotten the market in the right position. Look how good the setup was. Literally, if you did a sell stop right here, that was about 25 pips in profit. That is a good amount of money. You'd be riding in blue, so happy, thinking, okay, yes, the trend is in my favor. The trend is in my favor. And then all of a sudden, you see this strong blue candlestick right here, and the market shifted in the opposite direction. Took out your money where your stop loss is sitting right here. And look at the sell. 116 pips. $116 pips, guys. Is that making sense? Is that making sense? That the second part of the M, the hump, need to be a bit higher. Well, an M is an M, and that is what we're looking for, D and K. We want to see the M pattern, wait for smart money to jump into the market, clear up the M, go above the M, and wait for the reversal. That is where we want to enter the market. I hope that makes sense, D and K. Thanks, okay. So we want to wait for smart money to go over the M pattern, and this is where we want to enter the market. Let's go down onto the 5-minute time frame, exactly what I'm talking about. They went above the M, and look what they did. Came down, created an imbalance right here. And this is where you want to be selling, guys. This is where you want to be selling, in this imbalance. After they came back into this area, let's make the color green. The green area is where you want to be selling. Do we have the same things that we saw in the picture, guys? Give me a 1 if you're seeing the exact same pictures that I showed you. This is a live chart. This is a live chart. When did it happen? 4th of May, exactly in this month. Textbook sell trade. It is a textbook. So simple. They created an M, took out the liquidity, pulled back into the imbalance, and straight away, look at the sell. Just beautiful. Just beautiful. Just like that. And look, along the way, after they have created this, they kept on giving you opportunities to enter the market. They kept on giving you options to enter the market. Look, they dropped down, created another imbalance right here. They created another imbalance right here. And look, came back into the imbalance and they sell off. When do you recommend take profit on this strategy? Okay, so you saw the exact same way they took out some people creating M's and W's, trading M's and W's, and they reversed the market. Exact same way to take profit, you want to be taking your profit at the bottoms, double bottoms, W's. Yes, it came back into 50% of the imbalance and then sold. Exactly. And this is what smart money is doing. Once they have taken out the M and the W's, all they do is create imbalances, institutional candlesticks, pop back into the imbalance and they drop. Pop back into the imbalance and they drop. Same strategies going on and on. Look, the same thing we have right here. Look at this institutional candlestick right here. The blue candlestick they created right here. They came back into the candlestick right here. And look, they dropped. Same thing happening right here. They created an institutional candlestick right here. Came back into it. And look, they dropped. Textbook trading strategy. Look, in the sell side, they created an institutional candlestick right here, came back into the institutional candlestick, and they bought. How do you work on this? Okay. On the chart, now let me show you. Your stop loss. Guys, your stop loss is so easy. Let's just, your stop loss is so easy. If you're entering from the imbalance, your stop loss is just right here. Right here. How many pips? 50% of it. So the stop loss, 12 pips, sometimes maximum 20 pips. 20 pips stop loss, you're done. Out of the trade. Okay, if you want to know when to take your profits, when you are 30 pips in profit, that is TP1. Usually, personally, what I do is I start taking partials when I get to 30 pips. When I hit 60 pips, I take my second partial profit, and then I leave the rest of the trade to ride. I can hear what you're saying, but virtually you are going too fast for me to match what you're saying. Okay. All right. Can you tell me, can you tell me where you want me to go back from? Please. I'm here for you. I'm going to take it so easy. I'm here for you, so I'm going to take it so easy. Where do you want me to go back from? They created an institutional candlestick. Okay. From the picture I showed you over here, I showed you a picture here. And I said this was institutional candlestick, right? Got that, okay. So on the chart right here, let's just take this. Can I say this is an institutional candlestick, Augusta? It is where you were giving the examples, okay. So the institutional candlestick right here, they dropped down, came back into that same institutional candlestick, and look, they sell off. Another example right here. An institutional candlestick went down, came back into that same institutional candlestick, and look, they sell off. And at the bottom, this is a buy scenario. An institutional candlestick right here came back into the institutional candlestick and they bought. Yes, that was it. Yes. In this case, this is a reversal. I am going to talk about why this is a reversal pattern. I am going to go through that. I am going to go through this because I've done the sell module, but I haven't done a buy module. So I'll go over the buy module, then we can understand how they create their buy setups. Can you draw the W? Okay. Can you draw the W? Can you draw the W? Yes, explain the reversal. In this case, what we had for a reversal was a head and shoulder. Retail traders love to trade head and shoulders. Oh. Yes, explain. Okay, I am keeping up. I am keeping up. So retail traders are good at trading head and shoulders. Is that true or false? Give me in the chat box. Is that true or false? Thank you very much. Thank you very much. So I'm going to clear this and show you what the institutions did with this pattern right here. Left shoulder formed, the head formed, and look what they did. Came back into the head where the institutional candlestick is, and boom, they created the buy setup. So when people had seen this, retail traders would be jumping in for the buy. Somebody missed the buy, the actual buy, which as an institutional traders, we know that we are starting our buy from here and our stop loss is here. The market execution people who are trading head and shoulders are just going to jump in from here, thinking, okay, yeah, there is a buy, there is a buy. It has already reversed. And look what they did. Came back into that same candlestick they created right here. Let's just move this. So if you're entering your buy right here, by the time you realize they have already taken you out of the trade, and boom, consolidation, 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 and the final move just happens. Does that make sense? Give me a 1 if that makes sense. Give me a 1 in the chat box if that makes sense. Good, 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 good. Another opportunity where we could have entered the trade. Okay, let me show you this again. Where we could have entered the trade. Can I say this is a W right here? Oh no. I believe we can see the W right there. And look at the way smart money came into the market right here. Went below the W. Reversed the market. Created an imbalance. %50 of the imbalance, and ready they go. Does that make sense? Oh my God. This is so easy, guys. It is so easy. Are we getting some value? Give me a fire if you're getting some value right here. Give me a fire if you're catching some value right here. It is easy when you know exactly. Hence why I want you to practice this, guys. Practice is just go in the market. Look where they are creating M's and W's. I want to see the fires, guys. 39 people on the call. 39 people on the call. If you're not catching anything, be happy. Be happy to tell me, Francis, I'm not catching it. I'll go over it again. Thought the W's was between 1,500 and 1,800. Nah, that don't make sense. I guess that, can you come again, please? I would not have seen the W. Oh, okay. I guess that, would you not be able to identify that this is a double top or this is a double bottom? Just look in this side for me. Look in this side for me. Stop looking at the big thing that I did. Just look at this side. Is this a W, Augusta? Does this strategy work on any market? It does work on every single market, Galaxy Top 2. Augusta, let's go back to this. Can you see this W for me? Yes, that is what I'm talking about. A time frame. Time frame, yes. 3 to 6. And look what they did. I am gonna talk about why they came at this time. Does somebody know the significance about this time frame? 8 o'clock in the morning. Somebody in the chat box. Do you know the significance of 8 o'clock? London market open. London market open. And look, this was all a preparation for the setup for a London market. Have you realized usually in the morning, immediately the London market opens, prices are firing up, moving so strong, very, very volatile. And all they were doing was creating the setup for you guys. They were creating the setup for you. All you had to do was wait for the setup to materialize. Created the W, the double bottom, the consolidation. They created everything, giving you the signal of what they are about to do. Came all the way down, took out the W, and boom, price reverses. Oh, come on. Price reverses. Maybe you missed this trade. You did not realize that the institutions have come in. This is what I want you to see. This is where the institutions came in, created this institutional candlestick right here, created this gap right here. Just wait for them to go about the consolidation, do a pullback, just like we saw in a picture, do a pullback, 50% of the imbalance. If you don't have a buy limit, just do a market execution, and this is exactly what Team Traders is doing. Do a market execution, buy, and look, just like that, the trade is flying. Just like that, the trade is flying. So you enter at the 50%. Yes, if the gap is so big, I enter at 50%. In this case, it is big, even though we are in 5 minutes, but it is big. This is the setup that I want you to always have. The 50% is your entry, and your stop loss is just at the bottom of the institutional candlestick you're looking at. Guys, with smart money trading, you're not getting any drawdown. So if you get a drawdown in smart money, it means that the area you're looking at is just wrong. Guys, look, the wicks don't overlap. Great example, institutional candlesticks. Thank you very much, April. So do you usually only fill 50% of the imbalance? No, sometimes we do 100% fill. I am going to go through another setup, and probably we might see 100% gap fill. Okay, thank you. So in this case, identify your institutional candlestick, identify the imbalance, 50% of it, that is where they came. All right, guys, let's do this. In order for us not to miss the trade, every time you see an imbalance, enter at the 50%. For now, let's enter at the 50% of the gap in order for us not to miss the trade. You might get a little drawdown if we do 100% gap fill. A little drawdown in this case, that would probably be about 4 pips. Your trade will last in minus for about 1 or 2 minutes, and all of a sudden, you're back in the blues. And look, this is your perfect setup you want to see. And it happened, London market open. Do you do a penny order? Yes. If I am busy, I do a night shift. So usually what I do is I have time to look at all what is happening in the Asian session when I'm at work. So I already identified my setup. This is what I mean by you can easily catch 50 pips every single day. I look at what the Asian session did. Did it give me a W? Did it give me an M? All I'm going to wait is I'm going to wait for the Frankfurt Open, the German market open, which happens at 7. 7 o'clock, what happens is the German market is going to take away the M, the liquidity above the M, or the liquidity above the W. The Frankfurt market opens 7 a.m. This is what I want you to watch. Look which direction the Frankfurt market is taking the trend to. Did it take away liquidity? If it did, then you already have your setup for London market. Does that make sense, guys? Give me a 1 if that makes sense. Give me a 1 in the chat box if that makes sense. Brilliant. It is brilliant. It is brilliant, guys. So simple. They leave the blueprint for us. I am happy. Say it again, Coffee. Okay, I am going to say it again. So in the Asian session, they are going to continue consolidating the market, creating a little range. Look, in this case, the Asian session is right from here. Let's just take it from midnight. This was the high of the Asian session. Let's finish it at 5 a.m. Every time on your chart, I want you to take note of these times. Midnight, 12 o'clock, midnight, and 5 a.m. in the morning. Look what the market did. If German market is in a buy, that will be a buy later. Not all the time, not all the time, DNK. Let's not jump into conclusion. Sometimes what smart money do, they will come back, take out the liquidity at the bottom, take out the liquidity at the top, and drop the price down. This is where they create the FU candles. Look at how big this candle is. Sometimes they create this FU candlestick that takes away liquidity at the bottom, liquidity at the top, and reverse the price to the bottom side. So I don't want you to jump into conclusion. That is why I want us to patiently wait for the blueprint of the institutions. Did they create an institutional candlestick? 1, confirmation. Have they created an imbalance? 2, confirmation. Did the institutional candlesticks take away liquidity at the M or W? 3, confirmation. Wait for the pullback to happen into the gap. 4th, confirmation. 50%, take your trade. 50%, take your trade. In this concept, 5 minutes time frame is what I'm using. 5 minutes time frame is what repeat the confirmation. Okay, so confirmation number 1. Confirmation number 1. Do we have an institutional candlestick? 1. Do we have an imbalance created from the institutional candlestick? 2. I'm going to take it slow. People are taking notes. Did the institutional candlestick take away liquidity? Did the institutional candlestick take away liquidity? What do I mean by liquidity? Did the institutional candlestick went below the W or above the M? That is what I mean by did the institutional candlestick take away liquidity? That's your 3rd confirmation. Did we have an imbalance created away from the institutional candlestick? 4th confirmation. Are we getting a pullback into the imbalance? Liquidity is where people are likely to place their stop losses. Perfect, April. Thank you very much. So the retail traders trading W's and M, they see the consolidation right here. Is price trap king on the call right now? Coffee. Is that the price trap king on the call? Anybody here that trades price trap? Nah, okay. I was thinking that was coffee. So what price trap does is literally you're gonna trap the price right here. You're trapping the price. It's another coffee, same username. All right, okay. So you're gonna trap price right here. In this case, you'll be looking at the Asian session right here. So for price trap people, you're looking for the forced break, and you're gonna wait for the break retest. So price trap people are entering right here. The break and the retest, they are entering right here. Smart money, you had already catch about 11 pips. Are we catching the fire right here? Sorry, can you just put your mouse? Can you just put your mouse on the institutional candlestick? Okay. This is the institutional candlestick, Anne-Marie. It is the last red candlestick that created before the up move. The last red candlestick that created before the up move. In this case, this is the last red candlestick. The up move, an imbalance right here, 50% of the imbalance, and our trade is gone. Just like that, our trade is gone. Let's look at another scenario right here. Another scenario right here. And there is something very profound about the times that we're looking at this trade. Very, very profound. Can I say this is a double bottom right here, guys? Can I say this is a double bottom? Give me a 1 in the chat box if you think that is a double bottom right there. Glad people are identifying the double bottoms. And look what smart money did. Came all the way, took out the double bottom right there, created an institutional candlestick, and a perfect example of Dan. You were saying that do they always go to the 50%? In this case, look at what they did. They did 100% fill right here in the imbalance. 100% fill of the imbalance. Went up, came back into the imbalance. This is where you're buying, and your stop loss is right here. So they will not take you out of the trade. There is something that I want us to know. There is something that I want us to know. Let me show you first. This is a nugget. I said I was going to share a nugget for the people who are on the live call. Just for the people who are on the live call. So I'm going to pause the recording. Where is W? Okay, hang on. Wyckoff accumulation. No, I'm not going to talk about Wyckoff accumulation today. Let's take it easy, guys. There are some people who are very basic. I said I was going to share something with you guys today. Just for the people on the call. Just for the people on the call. Oh, no, sorry. Give me a second, guys. Oh, no, not you. Not this one. Bear with me just for some few minutes. I need to find it for us. Okay. For institutional trading, I believe everybody can see my screen. Give me a 2 if you can see my screen. Give me a 2 if you can see my screen. Happy days. Happy days. For institutional trading, when I factor in spread, some of the times what these institutions do is immediately prices approaching the zone where we have identified our point of interest. What they do is they increase the spread of the market. How many of us has realized this? Every time they want to enter a trade, the spread is really big compared to normal. How many of us have experienced this before? Exactly. This is just a nugget. Oh man, I am recording it. All right, yeah, I'll just pardon everybody. I'll just pardon everybody who is not on this call. So what happens is every time prices approaching where you have identified as your point of interest, smart money is intentionally, or the brokers are intentionally going to increase the spread. For you to not miss the trade, this is what you do. For a sell setup, I add to the stop loss. What they do is they are going to increase the spread. So they are going to take your trade. They are going to take your trade up, increase the stop loss to avoid the spread taking you out of the trade. So you realize that the trade was so quick in the London market session or in the New York session. It was so volatile. It rushed through straight into the imbalance with a long wick and a very big spread. So you'd realize that they'll just immediately take you out of the trade and straight into the direction. You're just asking yourself, how did they take me out of the trade? Who has experienced this frustration before? Oh my God. I have learned, guys. I have learned, and this is what smart money does to us. This is what the big banks does to us. Yes, too many times, more than I liked. Yes. They know exactly where you are entering the market. The footprint that they have given you, they know exactly where you are entering the market. They increase the stop loss, take you out of the trade, then immediately they are gone. Yes, but who do you do? Yes, but who do you do it quickly? It spreads so quickly. How? Okay, Lauren, let me just explain to you. You see, usually when prices are approaching supply and demand zone, which is our point of interest, the gaps and imbalances, the brokers intentionally increases the spread. What do I mean by spread? Sorry, I don't have any, I'm gonna try and find a picture of MetaTrader 4. I don't know, guys. Give me a second, I'm coming. I want to make Lauren understand this before I leave. Yeah. Okay, so can we see the picture? Can you see the picture right here? Lauren, can you see the picture that I've just pulled up? Yes. You see there is a red line and a blue line right here. I want you to follow me. Yes. So what happens is when price is getting closer to your point of interest, this red line and the blue line, they are going to separate wider. They are going to go bigger. Do you see this on your MT4 usually when you want to enter a trade at a good time? Do you see this, Lauren? So the blue and the red line is going to go wider than normal. Please, I want you to follow me, then I can move ahead. Can somebody help me in the chat box to explain this to Lorraine, then we can just move ahead. In the chat box, if anybody can explain it better. Okay, but if I have set a buy limit, I'm not watching exactly why they do that. You have set the buy limit. I'll send her a picture. Thank you, Augusta. Exactly why they do that. You have set a buy limit and you're not on your phone. So they're going to increase the spread. Maybe your stop loss is just 5 pips, 10 pips. They increase the spread. The spread is big enough to cover your stop loss. So by the time the trade gets there, you'd realize that you come back and the price just came as a wick into your entry zone, but then it still took you out of the trade. The spread is the difference between the buy and the sell price. Thank you, T. It tends to get wider at specific times. Thank you very much, T. You'd realize that you come back and then you see, oh, there is a wick right there, exactly where your price was, and it still took you out of the trade. That's what they do to sellers. And for buyers, let's go back to our picture. Let's go back to our picture, where we are. This is just a special nugget, guys. Special nugget. I use this for my setups. So I am giving out a real source right here. It happens a lot when there is some news release. Exactly. The volatility, they know that you are about to cut. You see, the thing about news is they release the news exactly into these gaps, imbalances, and then institutional candlestick. I will show you an example. Or sometimes they don't enter you into the trade if you're using limit orders. They wick your zone, but the spread is wide. Exactly. So for buyers, all I want you to do when you're entering this trade, as a buy limit, a limit order, just add at least 5 pips to your entry. Wherever you want to enter the market, add 5 pips to your entry to avoid being left behind. This is what smart money does. Increase the spread, come to your point of interest, and they just leave your order. And you're like, okay, so price came to my point of interest, but then it didn't take me into the trade. Of course, you refuse to add to your entry, so smart money will take you out of the trade. I am going to send this picture into some of the groups. Do you want me to share this, guys? Or you want it to just be a nugget for those on the call? In the chat box, please. Let's see how many people want me to share this in the group. Share? Okay. Oh, you're such nice people, man. Nice people right here. Nana says cold nugget. Oh my days. Yeah. I am gonna share. But yeah, always for smart money trading, if you set your buy limit, your stop, your sell limit, if you're selling, add to your stop loss at least 5 pips to your stop loss. If you're buying, add 5 pips to your entry. And this is how you're going to beat smart money into getting your trade setups triggered. Okay, so for now, I think we've done quite a lot. If there is anything that anybody do not understand, you can just unmute yourself. Let's have a little bit of a Q&A. Ask your question, and I'll answer it quickly. Then we'll wrap up everything and go away. Feel free. If there is any question after every single thing we've done today, you can just ask the question. Yeah? Go ahead.
Francis. How's it going?
It's all good, bro.
Good, good. Mate, I was going to ask you a question. How do you identify the M and W's? Because sometimes that's not crystal clear. Because I'm looking at some stuff, I think that's M, but clearly it's not working that way. And W's.
Okay, okay.
How do you work it out?
Let's look at something right here. I want you to bear with me. Let's look at something right here. Can you look at this area? Have you seen how price came to this area? One.
Yes,
And that same line, they came back here. Have you seen that?
Yep, yep.
So that is an M, right?
Okay.
So if you see a potential M, always just draw a line and see, are they touching the same line again? So they came here, touched it one, touched it two, they dropped. And look at what smart money did. Swept out the whole liquidity. Everybody who was selling around this area, you're taking out the trade. And there is nothing you can do about it. Please, can someone send a list of confirmation in the chat box? All right, anybody ready to send the confirmation in the chat box, please, for Nerissa. Does that make sense?
Yep.
All right, so would you be able to identify M's and W this time round?
Yeah, but with this trade, you wouldn't want to trade it because there's not the big imbalance of the institution candle.
Exactly. And look, in this case,
yeah, it just went up.
We took out liquidity, but we did not create any imbalances below the M. Instead, we created an imbalance above the M. Look at this area. Have you seen that?
Yep, yeah.
Created the imbalance above the M. Retraced back into the imbalance, and look, continuation of the trend. And that is a textbook 60 pips. You see how simple it is? Or you can wear it as a double top or a double bottom. Thank you, T. So literally what T is trying to say is a double top or a double bottom. A double touch, 1 and a 2. A double top. If it is at the bottom, 1 and a 2, a double bottom. I hope that makes sense to you, right? Can you use price trap with this concept? Of course, you can use price trap with this concept. And I showed you an example right here. Okay, let's assume with price trap, this is your consolidation. Let's just, and I know just a little bit about price trap. I'm not a pro at that. If coffee was here, that would be perfect. So you're gonna trap price in this zone right here. Let's just use this side. And in this case, you're gonna trap price at the bottom.
Sorry, Francis, you know, for a buy, are
Yeah.
you saying that the imbalance itself has to be below the M? And if it was a sell, the imbalance has to be above the W before you enter a trade?
Perfect.
Yeah. Okay,
Perfect.
good.
That's
Yay.
exactly what you need. You want price to come back in the direction of the M, create the imbalance, or create the institutional candlestick, and that is where you're looking to buy or sell. Right? All right, let's get back to the price trap thing. So in this case, price is just consolidating around this area. And look at what they did. Took out liquidity at the top. So price trap, you want the break, a retest, and you buy, right? A break, a retest, and you sell. In this case, look at what they did with price trap. They are going to take the liquidity above the top, liquidity above the top, liquidity above the bottom, and reverse the price where they first took liquidity. Is that making sense? Because price trap people usually are setting, sometimes people are setting buy stops. What smart money will do is they will come back, activate your buy stop, bring your buy stop to the stop loss, close you out of the trade. Everybody who had their their sell stop right here, smart money is going to activate their sell stop, bring them back to their stop loss, take them out of the trade, and then straight they go. Is that making sense? Titi Lope. Yes. So this is exactly what smart money does. In this case, they took out the buy liquidity first, came down to take the sell liquidity, and then they went into a buy. Sometimes you're going to see them take the sell liquidity first, then come back to take the buy liquidity, and they sell. All I want you to do as a smart money trader with this idea, if you want to incorporate it into your price trap, wait for them to take the liquidity on the top, on the bottom, and then buy. For a sell, wait for them to take the liquidity on the sell side, on the buy side, and then sell. 8% smart. Of course, that is exactly what they are doing. And if we should go through the market, you're going to see this over and over and over. Look at this area. This area, look what they did. Assuming you've trapped price right here. Took liquidity on the top, took liquidity on the bottom, and they bought. That is what smart money does in the market. They know every strategy we are using. It's up to us to understand that before they actually do an actual move, they will always want to take us out of the trade. So always look. That's why I said in the picture right here, what is the agenda of smart money? Where is it? It's very key. What is the agenda of smart money? What do they want to do? So if you're able to ask yourself these questions, then before you come to the chart, you already have an idea. You're starting to see the blueprint of what smart money is doing in the market. I hope that makes sense, guys. Give me a 1 if that makes sense. Give me a 1 in the chat box if that makes sense. Three people on the call. 33 people on the call. I want to see some more ones. More ones. All right, I'm happy right now. Can you repeat the confirmation? The confirmations for smart money. Yes. Okay. Let's use this side. The first confirmation I said is, have we created an institutional candlestick? Do you have an institutional candlestick? 1. Has your institutional candlestick taken away liquidity? 2. Did we have an imbalance created away from the institutional candlestick? 3. Are we coming back into the imbalance? 4. If price do not reverse back into the imbalance, please do not jump onto the trade, guys. This is very key. Do not jump onto the trade. Wait for them to come back into the imbalance. And then if you're with your phone, if you're on the chart, you can do a market execution. Sorry, please repeat. Okay. So what I'm saying is, do you have an institutional candlestick formed? 1. Did the institutional candlestick take away liquidity? 2. Has price created an imbalance away from the institutional candlestick? Thank you, April. April is writing everything into the chat for us. All right, April, we missed one. Did the institutional candlestick take away liquidity? Has the institutional candlestick taken away liquidity? Thank you. And then the next confirmation, do we have an imbalance created away from the institutional candlestick, number 3? And number 4, wait for the pullback into the imbalance or the institutional candlestick. Has price come back into the imbalance? Wait for this to happen. Thank you very much. So you take in your trade, number 5, you take in your trade of the 50% of the imbalance and your stop loss just below the institutional candlestick, below or above. Below if you're buying, above if you're selling. I'm waiting on you, April. Did you catch that? The number 5. Oh, you want me to repeat? What I meant is number 5, your entry is at the 50% of the imbalance or the opening of the institutional candlestick. Entry at the 50% of imbalance or the opening of the institutional candlestick. Stop loss below the institutional candlestick when you're buying. Stop loss above the institutional candlestick if you're selling. Thank you very much, April. Thank you very much. Is that correct? Your entry will be at the 50% of the imbalance of the opening or the opening of the bottom or the opening of the institutional candlestick or the opening of the institutional candlestick. Stop loss at the bottom of the institutional candlestick if you're buying, and stop loss above the institutional candlestick if you're selling. Stick, selling, on top, buying. It's a bit iffy for me. I'm not catching it. It's not too clear. You write it, okay. So 5. I see institutional candlestick and selling and below institutional candlestick. I see when buying. Okay, so that's it. Any more questions? Any more questions? Feel free to unmute yourself. I'm allowing the next 15 minutes. We can finish up to 15 minutes for any more questions. How often do you run this training session? Is it usually on Sundays? Okay, so usually I do it on Saturdays. I had a technical issue. I didn't have an internet network around my area yesterday, so I missed the session. So I decided to do it today. I do it every other week because of my work schedule. So I've been able to do it this week. It means that I might not be able to do it coming weekend unless next 2 weeks, which is the next Saturday from the one we are going to, if that makes sense. Hey, Francis, plug them into the educator also and the times. Okay. So to learn how to trade institutionally, if you want to know about which educators you would be able to learn institution trading from, let's go and go live. Let's go and go live. We have trade house educators, Mauritius Ceballos. He's an institutional trader. This man is called Mike Mouse. He's an institutional trader. Lex Wave, he's an institutional trader. Sandy Casper, he's an institutional trader. Oh my God. T, I love you. You've already sent everything right there for everybody. So yeah, these are the institutional traders. Zach McDonald's, Mike Navarrete, Rock Kuma. He's my favorite. Rock Kuma is my favorite. If you really want to know, helping out, thank you very much. I'll drop it in the group chat as well. Thank you very much, T. If you really want to learn the very basics of it, Rock Kuma is amazing if you want to learn institutional trading. Zach and Jordan, they are institutional traders. That is it. That is it for the trade house teachers so far. So please, guys.
Sorry.
Hello.
Sorry, Francis. What time does Tim and Manny's sessions are? No, Tim and Manny.
It's midday every Tuesday and Wednesdays. 12
Thank you.
in the afternoon, Tuesdays and Wednesdays. Plug in, catch some pips. It is just free, man. Just plug in into your Go Live. And Tim Trader is going to put a live trade session right there, a live trade right there for you to see, and how he's coming up with the setup. Now you understand the very basics of exactly what he's doing. So I think it's going to make sense why he's calling out those trades. If you are happy with what you've just learned right now, just give me some fire, at least. Burn me with some fires, then we'll close up. Thank you very much, guys. Thank you very much for jumping on this call. Join the Money Harmonics groups for times. All right, good. Thank you, April. You can send the link into the AFA Telegram group. Thank you, everybody. Thank you, everybody, for jumping on this. Who is Tim? Tim is he's an independent trader. He's not on IM yet. I think Manikinon is just trying to help him to become an IM educator. I think he's really good and deserves it. Let's all support it. Let's give good comments when we go and watch him. Then he would be able to come onto IM. Then we can all learn stuff from him. Have a pleasant. Oh, thank you very much, Nerissa. Everybody, thank you very much. Our session is over. Please go and practice this. Practice the stuff that you've learned. Make sure your notes are not just kept under the bed. Make good use of them. Catch you all another time. I will put the notice in whenever I'm doing another session. Thank you all, guys.